Hi guys, it is Pila here. It's okay with you guys, that's fine. Um, let's work on this one. I've been telling you one and the same thing over and over and over again, guys, but now I think I have a better way to explain this thing. Always remember, this is what I always say. Start from a higher time frame to see what is actually happening. This one is Canadian dollar versus the Japanese yen. And this is 12 months, no? This is 12 months, not a smaller time frame. This is 12 months. Can you see that? 12 months. The reason why we are on 12 months, it is because of, excuse me, it is because of we want to see the overall of the trend. That one is very much important. And believe me, if you'll be able to analyze correct, there are higher chance that you're going to get trades that are corresponding with the direction of the market. But if you fail to analyze correctly, you'll find trades that are not corresponding with the direction of the market. You know what does that mean? It means you're going to take losses. I know that at some point we do have people who are taking losses while they took trades that are corresponding with the direction of the market. I will explain why it happens. All right, but now what is very much important for us to understand how we check the direction of the market and then we look for entries. I think here we'll be using only support and resistance, or not support and resistance. We're going to use support and resistance. We're going to use trend lines, a little bit of continuation pattern, only three patterns, not a supply and demand. You see, if you're going to find supply and demand, we're going to use it as well. But I'll go down with the time frames. Né? So from here, this is a 12-month time frame. What is it we see from this time frame? If we look closer from this time frame, remember, if it is 12 months, that means you're going to see one candlestick per 12 months. So this candlestick that we have right now is for 2025. So what is it we get on 2025? I see the market continuing with the trend. That's what I see here. So whatever you do, you will be looking for buying opportunities. Let's verify that we have our first time here and our second time here. Where is the market headed? The market is coming down, it is going up. That means this is where we are going. We don't know which this candlestick it might go to the trend line, it might end up somewhere there, but I think it will go straight to the trend line for the whole year. It might go to the trend line and reject. We see as the market is pushing up since this is 12 months. So now you see that from 12 months, this is what you see. Let's check again what else we have. Another trend line that is the first time and the second time. To those who have not seen my previous videos or those who don't understand how to use trend lines, this is how I use trend line. I'm looking for the first time and the second time. I then draw my trend line. Without these two, you don't have a trend line. Without these two, you do not have a trend line. For you to have a trend line, you need to have the first time and the second time. And then what do you do after drawing your trend line? You then wait for the market to go back to the trend line so that you can take your trade. Your trade must also correspond with the direction of the market. Now, here's the important part. The big guys, when I say big guys, I'm talking about those who are controlling the market, including banks and all the stuff. They are looking for these kind of entries. This is higher time frame. They want to stay in the market. Now you can see that the market started here and then it went up. They are the ones who are pushing the market up. They know where the market is heading. They don't trade on 1 hour time frame, 2 hour downwards. They use higher time frames. So the best thing you can do is to understand how to use higher time frames and how the higher time frames works. Now you know that, okay, fine, you have your trend line. Where is the market headed? It is pushing towards the trend line. What is it that you must do now? You must just patiently wait for the market to come back to the trend line. And then you know that from here, the market will change the direction. So what is it that you can do now? Let's say, for an example, you are looking for your entry here. All right. On 12 months, you know that the market is giving us an uptrend. That one is very important to remember. What do you do now? You go down with the time frame. From 12 months, we go to 6 months. Let's check on 6 months. What is it we have? Our trend line, it is still more visible as we are going down with the time frame. Just verify here your first time touch. Here is your second time touch. Where is the market headed? Towards the trend line. The market went up and then it came back down. Why did the market go back down? We will go down with the time frame to verify everything to see why did the market go down and all the stuff. So now you see, okay, fine, here you have your second time touch. What are we waiting for? For the third touch. Okay, fine. And then you come down, you check, but this one is not important for now. We're not going to use it anytime soon. We're not going to use this anytime soon. So what we're going to do, we will focus on the uptrend. So let me erase everything again. Now we see, let's add more. Remember, I said we're gonna only use three patterns, gonna be support and resistance, continuation pattern, and trend lines. So here you can see what is it we have? A resistance here. Let's identify the resistance here. Remember, what I am doing here is to identify the trend. The reason why I'm going back is to identify the current trend. So here you can see you have a what? A resistance here. Your resistance was broken by this candlestick, the green one. You can see here, if you go down to smaller time frame, this one, it became a resistance. And then the market went down a little bit. This is 6 months time frame. The second candlestick penetrated the trend line, and the resistance, and then it went down. The next candlestick, what did the next candlestick do? It broke the trend, the resistance. Now, after they have broken our resistance, what happened? They came back down to test as what? As support. You can see this candlestick that became a continuation pattern. Why did the market went down there? You draw your trend line like this, you get the trend line. Let me just draw the trend line so that you can see it. This is the trend line. It will be more visible as you are going down with the time frame. Now, if you are observing this trend line, this one specific, what is it you're supposed to be looking for? This uptrend. If I find myself selling here, where is my exit point? Supposed to be on the resistance that was broken because of it was never tested as support. Therefore, this candlestick is going to be our support. It's gonna create our support. So the support was created. You're supposed to exit and look for buy opportunities, and then the market continued with the trend. Now we had a touch here, of which you can also identify this one as a resistance. And then what happened? The market came back to this trend line. But now I have to call it a trend line because we have two touches. The market decided to turn here, but there's a reason why the market turned here. It is because of the trend line. Now you can see this is just straight to the point. Here is the first time, now you have your second time. That's the reason why the market turned in. Because even if you were to use a line chart, the market went a little bit down. I'm sorry, not down, it went a little bit up. That's why this one we're going to classify it as in a trend line. But again, you can still use this one as a resistance. You'll see over time, I'll show you why we're going to use this one as a resistance. Let me just show you. The reason why I'm saying we're going to use this one as a resistance, let's say for an example, the market is continuing with the trend, and then the market decides to break the trend line. It will go up and reach what? And reach this resistance. And it will test this resistance as what? As a resistance, and then it will come down to test the broken trend line as what? As support, and then it continues to the upside. That's the advantage I always say about trend lines. Whenever they're going to break the trend line, they will come back and test it. Now, let's go down with the time frame. Before we go down with the time frame, always observe the actual trend. Now you see that, okay, here we have a continuation pattern. The market is pushing on the upside. Let's go to 3 months time frame and see what is it we have on 3 months. Let's see what is it we get on 3 months. This is our 3 months time frame. What is it we have? Our continuation pattern on 3 months is still clear and visible. Here is the continuation pattern. But someone might have a question why they penetrated this one up until here. We have no idea, but we know as we are going down with the time frame. But by now, you can even see what is actually happening. Here is your resistance. Again, a resistance, even though you can see that they penetrated a little bit, we can still see that this is our resistance if we use a line chart. So since this is our resistance, they're going to go down. Hence, you notice that they went down and they came back to break the resistance here. They created a new resistance thing. They came back down to test the previous support. As support, they continued with their trend. Now, here is our trend line, still available. You started from which time frame? From 12-hour time frame, you went down. Now you can see what is actually happening. Now you have a clue what is actually happening. What do we do now? We move again, we go to monthly. All of the higher time frames are giving us the same thing. Can you see that? All of the higher time frame are giving us the same thing. Let's see, monthly. This is monthly time frame. You know that every month you're gonna just see one candlestick if it's monthly time frame. So since all is monthly time frame, this candlestick that we have here just represent January. Okay, fine. We're not gonna pay attention to that right now. So what we're going to do, we will just look at the structure. So here we have the continuation pattern and the breaker structure as well here. And then the market came back down to test the breaker structure. Hence, you can see the body of the candlestick ends here. Only the wicks are penetrating down. Right? Okay, fine. That's not a big deal. And that's not a big deal at some point, but it is saying something to us. If we pay attention to the wicks, this is a sign of rejection. They can't go down. They tried so many times to go down. You can even see by looking at this candlestick. You can even say we had news events. They tried to push the market down. They failed to go down. They pushed instead. They closed above. They pushed the market again. They closed here. They failed to close below this support. Remember, the support was the resistance this side. It was broken roughly here. They failed to close below. Instead, they closed above the support. And then now what are they doing? They are changing the direction according to the direction of the structure of the market. Whenever you have a resistance and your resistance becomes broken, it becomes a support. Whenever your support is getting broken or it's going to be broken, it will become a what? A resistance. I think by now you guys know that. So let's move down. We go to weekly time frame. Remember, we started from 12 months. Those higher time frames are very much important when it comes to identifying the trend. Now you know that, okay, we are looking for buy opportunities. Now. So let's go to weekly time frame. Let's go to weekly time frame and see what is it we have on weekly time frame. When we look carefully here, you can see that here, okay, okay, fine. I wanted to remove few things. Let me remove the trend line instead. Then remove this support. Already we know that we have a support there, right? Now let's zoom out a little bit and look carefully what is it we have. And also the course of the market to push down up until here, because we can see that they were supposed to reach, they're supposed to reach up this resistance or this continuation pattern. You can see they tend closer to the continuation pattern, but that's not the main reason why the market turned here specific. So the reason is, let's find it. Let's find the reason for the market to turn low. Remember, when the market is going down, pay attention to the uptrend. Now, looking at this uptrend here, what is it we have? We don't have much. And then what is it we have here? Do we have a trend line that is reaching this one? No. Then that means we're going back. Let's see if we go back, okay. I see a trend line here, starting here, pushing up like this. This is my first time of the trend line. Remember, this is weekly time frame. Here is my second time of the trend line. That was, when did they lift this trend line? 2023 around March. When was it tested? 2024 around August. This is weekly. You know what is happening. Four candlestick represent monthly. How many candlestick do we have here? A lot. So remember, 2023 March up until 2024 August, the market came back to this trend line. That is why you see what is actually happening right now. The market is pushing up according to the structure we have here. Here is your trend line. It's first time. Second time, what do? You look for buy opportunities there. Now, I want you to look at this and understand what is actually happening or what happened. This is your third touch. This is where you're supposed to find yourself looking for buy opportunities. Remember, I mentioned this thing before that whenever you are trading trend lines will allow you to risk less and make more. Let's say your risk is going to be like this. This is your take profit. Why is my take profit where I ended it? Take your trend line, I'm sorry, your horizontal line and move to your left-hand side. What is it you have? Support, support, it was broken, it became a resistance. That's your take profit. That's where you're supposed to exit. What happened? The market hit your TP and then it went down. Look at this. Remember, ngathi uma uthatha i-trade lakho and your risk. I-risk yakho ayibe incane. Look at my reward, the risk and reward there. It's risk, flip it, so risk to reward or ratio, it's 6.62. That means my risk is 6, my reward is 62. Imagine. But I hardly pay attention to this. What I just look at is the size of the risk and then how many times do I have to risk here, or how many times my risk is getting into the profit. That means my profit is more than the risk. Or I just go like risk. Let's say if my risk is 5, I'm sorry, not risk. If my reward is 1, my risk, I'm sorry, if my if my risk is 1, my reward supposed to be 5. 1:5. This is the 1, this is the 5. How many times let's try to calculate, even though it won't be accurate. No? I think there's no need for me to count. Let's make an example. It's 1, 2, 3, 4, 5, 6 and something. So my risk is 1:6. Always risk less for trades that will make more. Do you get the point? If here you were to risk 1,000, you were to risk 1,000, how much are you going to get in return? Can you see that? Let's just make an example of 6,000 because of the reward is it's going 6. It's going up to 6 here. A reward yako, I even more than the risk. Do not make that mistake. No? Don't make that mistake. Let's continue. I'm not sure if I'm making sense, but if I'm not making sense, I'll find a way to explain and make sense. Don't worry. Now, what's going to happen once we reach the resistance day? Those who are trading support and resistance, they're going to step in and push the market down. Can you see that? Now, what is it you're going to do? You will also look at what happened. Now, the market pushed all the way up. There's your resistance. And then the market turned here. Why did the market turn there? It is because of this. The reason for the market to turn here is because of the previous one. So it's support, it was broken, they came back to test it. Now, look at what happened. Sorry, guys. All right, look at this again. Let's pay attention to what happened. Here, you have your first time, looks like this. And then again, where the market turned on the break of structure, you have another touch. Can you see that? This is weekly time frame at your trend line. Here's your trend line. But now you know where the danger is. The danger is the trend line is against the trend. This trend line, it is against the trend. As the trend line, it is against the trend. You see what happened? They reached to the trend line and then they tried to go down, but they failed because of everyone is buying. And then a continuation pattern was created. You can see that the next candlestick pushed all the way up to this level. And then what happened? The market rejected the trend, this new candlestick, and then they closed above the trend line. That's a signal that the trend line is going to be broken. Now they are still pushing up. You can see that the new candlestick we had pushed up until here. It is going up. Can you see that? Now we're going down, still looking for opportunities. What is it we have now? We have a continuation pattern. Okay, fine. What to do from here? Let's go down with the time frame. Let's go down with the time frame. As we are going down with the time frame, what is it we have? What is it we have? Trend line again. still the same. Let me adjust everything. Here is your first time touch, and then here is your second time touch. Here, specific, the trend line was broken here. This is where our trend line was broken. Can you see that? This is where our trend line was broken. They went all the way up to this level. Why did they turn here? Pay attention to your left-hand side. We have a continuation pattern. So continuation pattern, supply and demand. On our left-hand side, we have supply and demand. Hence, I said we're not going to pay much attention to supply and demand part. It is here. In the beginning of a new trend, this is daily time frame. What is it we have? Supply and demand. Sorry, this is our supply and demand. And then the market decided to go down. So if you don't have any idea what's happening, you think that the market is a downtrend, you will start doing what? You will start selling. You sell here, the market will be against you. Hence, you can see now the market is going up. Look at this. I mentioned this thing before, that the reason why I prefer to trade trend lines, it is because of whenever you are expecting to sell here, and then the market decides to break your trend line, let's say you lose that 1,000, you wait for the market to go up again to show that now we have a new trend, of which is uptrend, and then it will come down to test the trend line. Once they have tested the trend line, get in and continue the new trend. That's it. The money you lost while they were breaking the trend line, you're going to gain it again while they are testing the trend line to show that we are pushing up. So you will take losses, but your loss is going to be recovered and you'll find yourself making more. For an example, you lost just 1,000 here, now, while you were selling. Now you see that the market is going up. You wait for the market to come down to the trend line. Once it reaches the trend line, what do? You buy your risk another 1,000. By the time the market reaches this level, you have gained your 1,000. This level, you have multiplied the 1,000. Here, you made a lot again. It's like you did not take losses. That is the important part of trading. But we'll go deeper on that one. Let's go and check again. What else do we see here? We see that the market went all the way up. It came back to test this broken trend line. Can you see that? Now, let's pay attention to the actual trend. Look at the structure. This one, it came back down. It went up, it came back down. It went higher, it came back down. You know the structure now. There might be possibilities that we break above as well and come down and test this level up until we reach that level. Up until we reach that level where we have a trend line on what time frame was that? On weekly time frame. Not weekly. It's 12 months, 6 months, and 3 months. I swear we have that visible trend line. All right, now let's see if we go down with the time frame, what is it we get? Before we go down with the time frame, let's look at this one, the actual trend. I want to see something. So you see, we have another confirmation on daily time frame. Here is your first time. Here is your second time. I've said this thing before, and I will say it again. Trend lines will allow you to risk less and make more. It's up to you if you want to use them. Look at this. Your risk. Let's say you're going to exit it. Look at the risk. It's 4 to 84. Can you see the reward date? It's written risk reward ratio 4 is to 84. Your risk to reward must look like this. If it looks like this, the trade is wrong. Sometimes I've seen people taking trades looking like this. You never become profitable if you are looking for trades looking like this. And remember, you just wait for the right opportunity for you to get trades like this one. You don't just jump in just because of you feel like, you know what, I must get in. No, you wait. For an example, we are on daily time frame here. You know that on daily time frame, you're going to see one candlestick. Now, so you can see here, they moved sideways for almost, I think, 2 weeks before they broke the trend line. Before they break the trend line, they consolidated for approximately 2 weeks before the breakout. Now, after the breakout, check The candlestick closed above. Now we know what to expect here. The market will go up. What is it we have on our left-hand side? Supply and demand. You see, all of the patterns that I am using, they are all available here. Trendline, support, and then here's your continuation pattern, even though I'm not talking about it right now. Here's your continuation pattern. Here's your supply and demand. Can you see that all of the patterns are here? Sharp. Now, let's go down again. Let me remove this one. Let's go down and see what is it we get as we are going down with the time frame. Right now, we are on daily time frame. Let's move to smaller time frame and see what is it we get on smaller time frame. We're moving to 4-hour time frame. On 4-hour time frame, you can still see the trend line is more visible. And here we have a lot of trend lines. Guys, when practice how to use trend lines, you'll become profitable. And you think I'm joking. It's fine, no problem. Yes, we think it's fun and it's a new time. It doesn't mean you guys don't like that. Look at this. I want to show you something important about trend lines. Now, I'm going to show you something important about trend lines. I know that so many people will tell you guys to not trade trend lines, blah, 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 blah. So it's this is your trend line. First time, second time, you buy on the third touch, right? Look at the risk you're supposed to get if you had a chance to buy them. This is your risk on 4-hour time frame. You have nothing below. Once they break up until this level, now they're pushing down. This is your risk. Even if you can put your risk like this, is still fine. Look at the reward. It's 4:67. Always take trades that will allow you to make a lot after risking. Do not make that mistake to take trades that won't pay you out. Fine. Let's look for another one. Just by trading trend lines only, you will find yourself profitable in the market. Only trend lines, nothing other than trend lines. Sharp. Look at this again. This is what I just so even if let me see. Can you see that's still accurate? First time, second time, third time before the breakout. Now you know that on 4-hour we are about to break the trend line, and if we are breaking the trend line, where are we headed? On the continuation pattern. Where is the continuation pattern? Here. And so now it's going to be a continuation pattern because I'm on 4-hour time frame. On the higher time frame, it's a supply and demand like the one that we have here. The reason why the market gave us the supply and demand on a higher time frame, it is because of the supply and demand on smaller time frame. The market consolidated and then created a what? A supply and demand on a higher time frame. Now that you see that, okay, fine, I'm going to get in, I'm going to exit there. Now, if I'm going to exit there, I'll wait for the market to come back to the trend line. Now, look at this. Look at the risk, 9:55. Look at the risk. Even if you can adjust, still it's giving you nice risk. Now, look at this again. The trend line. If you trade on smaller time frame, you won't be able to see such moves. Let's remove everything. You look at the structure and assume, you know what, now we are pushing the market down. We are pushing the market down. Therefore, we must look forward. We must look for sell opportunities. You'll sell where you don't have to sell. Look at this. I want you to understand why I said earlier, we will have people who will take trades that are corresponding with the direction of the market and still take losses. How? Okay, sharp. I'll go to that one. Look at this one. This is how people end up becoming confused. Here, what is it you have? Support. This is 4-hour time frame. The support is more visible as you are going down with the time frame. Support. Whenever the support is broken, it becomes a what? A resistance. What is it so many people will expect here? They will expect to sell and then the market will reach this level and now they exit. But go deeper and check what is it you have. They left a continuation pattern here. Can you see the continuation pattern? It is visible on 4-hour time frame. And then this candlestick close below the support. Even if I adjust the support, still accurate. This candlestick, The third candlestick after the continuation pattern closed below the support. That means the support is broken now. What are we expecting now? The market to come back and test the broken support as a resistance. Remember, I said before, whenever you are trading break of structure, go to your left-hand side and check what happened before the breakout. That one is very much important. Check what happened before the breakout so that you know whether you have to buy or you have to sell or you don't have to get in. Now, look carefully here. What is it we have? We have this continuation pattern and the break of structure as well. So many people will sell here and place their stop losses where they're supposed to take their entries. I've mentioned this thing before. Look at this. On smaller time frame, it's a good opportunity to sell. 1 hour, it's a good sell. On 1 hour, it's a good sell. This is your risk if you're going to step in there. But now look at this. If you're on 1 hour, you're taking a break of structure. This is how your stop loss will look like. What's going to be your expectation? If you don't have much experience, you expect the market to go down, right? And you look at your risk and say, that's a good risk. That's a good risk. So I'll just give the market a space to break. Look at the risk. Look at the risk. The reward is very much good. Look at the risk and the reward. It's the risk is 4, the reward is 84, 4.84. This is very much good. But now look at what they did. They pushed the market all the way up to where you're gonna be placing your stop loss to keep you out the next thing you reject. They know how far you place your stop loss. So they'll push the market to all the way up. And if you will be trading on 1 hour time frame, even your stop loss will be roughly below. Remember, so many people do not want to find themselves taking losses. So what is it they're going to do? They will try by all means to minimize their risk. And at the end of the day, they go hard to the market. On the market, what they do, they call it what do you say? I forgot. They go full margin. You go full margin, they push the market to your stop loss. Already they know that we have people who are trading the break of structures. So if you're out there, you trade a break of structure, you need to be careful for such things. This one is very much important. Okay, sure. Now, if you do have a question, feel free to ask whatever you have. And if it's your first time you come across my YouTube channel, please do not forget to like and subscribe. Sure. Now, you see, you're going to step in and sell there. You place your stop loss above. What happened? They will push the market to your stop loss. So the best thing that you can do, I've said it before, that where they place their stop losses, we guys gonna place our entries. This is where your entry is. Isn't that, guys, you know how to trade supply and continuation pattern? This is your continuation pattern. Your stop loss is supposed to be above. Still the risk is 3 to 12. Can you see that? Still it balanced. Can you see that? But if you push your stop loss a little bit higher, can you see that? It doesn't make sense. You see? Very much small. Now this is small as 50-50. Small as 50-50. So your risk is almost equal to your profit. So seems like you don't know what you're doing when you're doing such things, right? Sure. Let's remove it. Now that you know that the market is pushing up, you're supposed to be looking for opportunities to step in the market. Hit your trend line there and see what's going to happen. But they're going to break this trend line. Here you can see you have a continuation pattern. Let's go to 3-hour time frame and we'll see what is it we have on 3-hour time frame. On 3-hour time frame, we have a continuation pattern here. Let me adjust this one. On 3-hour, you have your continuation pattern there. So now you know that, okay, fine, we can push the market to this continuation pattern and then we continue with the trend. I see, I get it. Okay, sharp. Let's move to 3-hour time frame. I'm sorry, 2-hour time frame and see. Oh, flip, that's 2 minutes. Small time frame such as 2 minutes. 2-hour time frame. Here we go. This is 2-hour time frame. You can see the trend line. 1, 2. I won't advise anyone to look for entries on this trend line. Yeah? The reason why I won't advise anyone to look for entries on this trend line It is because of this trend line is going to be broken. They'll push up and come back down, and then they continue with the upside. Can you see that? Okay, sharply. The reason why I'm saying all this, it is because of the information I got from higher time frame. Remember, I'm not just getting in here to guess what's going to happen. I'm just going through all the time frames to see what is actually happening. Have you seen that all the higher time frames up until 2-hour time frame, they are all corresponding? Imagine someone knows very well that the market is going up. It's on an uptrend. They decide to get in here and buy. Now, look at this. Looking at the current price, you step in here, you buy, and then you don't know, you have a continuation pattern. You step in, you buy, you place your stop loss roughly below like that. What's going to happen to you? The market will kick you out and then it goes down. What are you going to think? Flip it and sell. You start selling. After selling, the market reaches the continuation pattern, it reverses, it continues with the trend. When I saw selling in a pattern, can you see that? These are the things that you need to observe. These are the things that you need to observe. And whatever you do, make sure that you check all the time frames. Make sure that you check all the time frames. That's very much important. This is what you must do. Make sure that you check all the time frames whenever you are analyzing. And that one is very much important. Let's check on 1 hour time frame. What is it we have? This one is very much interesting, guys. Take your time when you analyze. Don't just get in and buy just because of you want to buy. No? Take your time to observe. Let's move this one. Quickly review. Take your time. Take your time. Here's your trend line. And put it back. Okay, nice. So here's your trend line. What's happening here on 1 hour? Your first time, second time, third time. Remember, in market, you guys, I have decided to achieve for no reason. Eh? There's going to be a reason for the market to reverse. Hence, you can see here the reason for the market to reverse is because of this trend line. Here, we're going to have a continuation pattern on a higher time frame that's going to be created that will cause the market to test the trend line, and then they come back to test this one, and then they break. Once they break the trend line, wait for the retest so that you can execute your buy opportunities. Let's check on 30 minutes. I'm now tired. Let's check on 30 minutes. What is it we have on 30 minutes? Trend lines are all over. Okay, just boom. It is checking the another. We have no exit and a final page. Go on your command final page only this because of the trend line. Do you have something on your left hand side to go exit? No. But on your right hand side, what is it you have? The trend line. And the Payana, we have another trend line. This is 30 minutes trend line. Let's now the Payana, I know it touch, but each of the close lounge or wires. Last is in a continuation pattern. If you are trading in continuation pattern, the entry ikala la iphelela ku la ngibeke stop loss samkhona. This is your entry, this is your loss. The one, but on a higher time frame. But if you are trading on smaller time frame, on time frames to see which as you are going down, it's all like let's go to 15 minutes. If there's a pair that you want me to check, please let me know which one you want me to check so that I can check it tomorrow. Each and every day I'll do daily analysis. So please let me know which pair you want me to check. Let me know which pair you want me to check. Let's see. Now that you see your Kintiako is straight, you know what to look for. You know what to look for. I already told you what you're trying to in and then who direction you're trying to spend now. Well, now you must look forward. No? Let's look for another one. Let's look for another one and see what you can see tonight. I'll erase everything here. Erase everything. Let's see what is it prepared. Typical Canadian updated the Swiss francs, one of this pattern. Okay, another risk. This one is available on a higher time frame. Actually, from daily time frame, this one is more visible. Let me show you. Everything again. I won't go deeper to higher time frame now. I'll just start here. But if you want, let me just go to higher time frame. You see a beautiful uptrend. This is Canadian dollar versus Swiss francs. Now, look at this here from this time frame. Take your trend line with this. I think it's this one. Yeah. This is 12 months. Let's go to 6. It's more clear and visible. Can you see that? When is your first time? Here is our first time. First time. Second time. Can you see that? That was 2016. And then the market came back 2024. Can you see that? You can even see the rejection part. If you are not trading a higher time frame, you won't be able to see such things, guys. If you are not trading on a higher time frame, when I say trading, I don't mean like buying here on 12 months, but to open the higher time frame and see what is actually happening on the higher time frame. That one is very much important, but only if you want to become profitable, that's when you start using this information. But if you don't want to become profitable, it's fine. You can just relax on a smaller time frame. Look at this. What is it we have here on 12 months? A trend looking like this. Trend line looking like that. First time, second time, right? Now we go down with the time frame. We go down with the time frame. We go to 3 months. We go to 3 months. Now you know that we have a trend line looking like that. Now, as you have a trend line looking like that, you know very well that whenever you're looking for opportunities, this trend line will have an impact. But remember, it's a higher time frame. Everyone is observing this trend line. Whatever you're gonna find on a higher time frame, know that everyone is observing it. Those things you're gonna see on 1 hour time frame, they might observe it, but not that much. Now, look at this again, support and resistance. Put it here. This is the breaker structure. Can you see that from the left hand side? 1, 2, and then the higher the chance that Mama Kubera with the trend, they will break this level and go up. Mama figure Pizzo again, what is it they have on your left hand side? The breaker structure as well. It is important to know how to use higher time frames. The minute you pay attention to higher time frame, or the more you go to higher time frame, it is the more you have more information left. So let's erase the resistance. I don't need all of these things on so indicators and all these things. What is important for you to understand is pure price action. Once you understand pure price action, you know what will happen, because of most of the indicators are very much lagging, guys. So it is very much important for you to understand what we are doing in the market. Sharp. As you call up for now, we are looking at the structure. You see that, okay, I'm on monthly time frame. I have a trend line that is pushing up like that. Now, you can even push it all the way up there. Now, once they break this trend line, you know that they have changed the direction of the market. I'm on monthly time frame. Let's move down with the time frame to weekly time frame. Now that we are on weekly time frame, let's see what it is we get. First time, second time, right? Here's another touch at your trend line and push it down like this. The trend line look like that on weekly time frame. What does that mean? They have broken this trend line and they went up. This trend line looks like it was not tested. So what is it you have? You have a resistant. This resistant might cause the market to change the direction to come back and test the broken trend line. Okay, sharp. What do we do now? We move to day. Remember the importance of checking all of the time frames. Then you don't start from smaller time frame. You start from a higher time frame, you go to smaller time frame. By the look of the looks here, it shows that they have tested the trend line. How? You can see that the touch ends roughly. That's the touch as well. They have broken and went up. They came back again to test, and then they continue. Now you have the continuation pattern here. So it means when they come back here, they'll just test this continuation pattern and continue with the trend. This is what we get on each time frame. on daily time frame. Let's then move to a 4-hour time frame. 4-hour time frame and see what is it we get on 4-hour time frame. On 4-hour time frame, this one is more or less the same. This is where your resistance is. This is your resistance. In the beginning of the new trend, you get supply and demand. Let's highlight the supply and demand and move to the right-hand side. As we highlight the supply and demand, what is it we get? 1, can you see that? And then they push the market down. As they push the market down, what is it we have here? You will see as we are going down with the time frame. Then you see here again, the trend line. Can you see the trend line? What does that mean? That means we continue with the trend. I'm on 4-hour time frame right now. Look at the rejection on the trend line. Let's go down the time frame. Guys, parallel these things. I'll use 3-hour. On 3-hour, I have a broken trend line as well. I have a broken trend line, even though it was not tested in tempting. Why? Because of if you go down to smaller time frame, you're gonna get a minor support and resistance. Let's go to 2-hour. Let's go to 2-hour. On 2-hour, the minor support and then the resistance is more visible. Can you see that? And also the trend line. The trend line is contributing very much to the market to tell and continue with the trend. And then let's go to 1 hour. 60 minutes. Can you see that this thing is very clear? Very much clear. Even if you have to adjust still. Very much clear. So you can see that your job is to know where the market is headed and take trades that are corresponding with the direction of the market. Is that hard, guys? If it's hard, let me know what's the problem. Let's go back to the time frames and then erase everything. There's something that I want to see. And then this is what I want you to see. The structure. Can you see that? You can even start here. It's 1, then the market push back, and then it's 1 again, the market push down. Now it's going to be 1 again, the market might push down before and then continue the trend. This is the structure of that trend. In fact, we want to use this one. Let's use 4-hour. On 4-hour time frame, what is it you have? You can even start here. Look at the structure. 1, 2. Can you see that? Okay. I'm just counting. The counting means nothing left. I'm just counting general. Look at this. The market is creating higher highs as the market is going up. What does that mean? It means the market is on an upside. Okay, fine. You don't get this one, eh? Let's say you do not understand it. Take your trend line and push it all the way up like this. What is it you get? An uptrend. The market is failing to break this trend line. The market is bouncing above this trend line. How do I use my trend lines? Above, I have what? Resistance, if it looks like this. And then below, I have support. If it looks like this, what is it I have? A resistance and then support. Can you see that? Angazi noma mhlambe lento engizama ukuyichaza iyezwakala. Uma ingezwakali, let me know. So here, uma i-market bouncer here, it means we are still on an uptrend. Up until the market break the trend line. Once they break this trend line, they'll come back and test it. Now you know that we have changed the direction. That one is very much easy, guys. If you do have a question or there is something you do not understand, please feel free to leave a comment and let me know what you think. And also write my teaching, guys. Let me know what you think about how I teach. If there's something that I need to upgrade, let me know, guys. Let me know how you think about what I teach, or do you guys understand what I'm trying to say to you here, or you don't even hear a thing when I'm trying to explain. If you do gain something, let me know as well, so that I can keep going. I don't want to just continue this while you guys don't understand anything. Do not forget to like and subscribe as well. Where?